Natural gas prices are surging amid an increase in demand in the United States and in Europe, fueled by gas shortages. And new this morning, Germany's chancellor announcing plans to lower the sales tax on natural gas there to 7%. Joining us right now is Amrita Sen, Energy Aspects founder and director of research. And Amrita, when I saw this news that they were lowering the tax to 7%, I thought, my gosh, how much was it before? Looks like it was 19% of a VAT tax on this. That's crazy.
Yeah, I mean, Europe's always had very high taxes, not just for gas, but also for petrol, gasoline and diesel as well. So, yeah, it's not a surprise. And you are seeing this across the board to ease pressures, to ease inflationary pressures on consumers. Governments around Europe are starting to reduce taxes.
So what's happening right now, just in terms of what we should anticipate, what we should expect? We're hearing stories not only in Europe, but also in China about how power shortages. In China, it's different. It's because of the hydropower that they're having shortages with, where this can lead to manufacturing shutdowns. And it just seems like it is getting to be a pretty precarious situation as we get closer to the potential for colder months and the need to heat homes. How do you see this playing out?
Yeah, absolutely. I mean, the China point you mentioned is so important because we've already seen a big issue with supply chain bottlenecks, right? That's one of the big reasons why we see the inflationary pressures in the West, because China remains the only country that is yet to fully open up post-COVID. In fact, they still have lockdowns. And that's why a lot of factories aren't operating. Workers aren't able to go to factories so that the factories can run. And that's one of the big things that we are expecting to ease after the 20th Party Congress in October. But these droughts are only going to make the situation a lot worse. We are potentially going to see some upside to other, coal or oil, because some of these manufacturers might just use backup power. But overall, I mean, the power shortages for China, like you said, very separate reason, but it absolutely adds to those inflationary pressures around the world. In Europe, of course, very different. I mean, the gas increase in prices that you've seen hasn't been a particular trigger. It's just been a continuing issue, and the risks around the upcoming winter. What if Russia turns gas off? Again, not our base case, but that's what's been fueling the price increases rather than any specific data point.
So what do you make of the pullback in oil prices? WTI back at $88, $89 now. And, we keep talking about how there's this shortage. And earlier this week, there was a sudden potential glut in WTI. I don't know how temporary that is. What happens? What happens next?
When inventories are at a 10-year low, potentially in places at a record low, I really struggle to call it a glut. I think these words are used in a very simplistic way often, particularly in the media. So I would really caution against that. Look, yes, the market is not as tight as it was even a couple of weeks ago. But this is seasonal. We are in refinery maintenance. This is a seasonal shoulder season where demand, even in Europe, is the weakest because industrial production is weak. People are on holiday. So we should always put that in context. The recessionary fears are very, very high. We've put out a piece again yesterday about what high gas prices could do to Europe. But these are already baked into our numbers. The big driver, of course, for oil is Iran, right? Potentially, if Iranian barrels came back, if there was to be a deal, then yes, you could see quite a lot of pressure on oil, even from current levels, maybe a little more downside. But without Iran, we are absolutely going back above $100 come winter because the SPR ends and the embargo kicks in.